Hey traders, Nick Shaheen here recapping the week ending 12/19, 2014. Quadruple witching. Interesting week to say the least. Record setting week, probably, at least in recent years. We had candles like you wouldn't believe in the last couple of days, 3 days to be exact, 5 days if you want to include the red ones and the green ones. But here's the scoreboard today, Friday. Up 0.15% on the Dow, up 0.46% on the SPX. Failed to close at a new all-time high, much to the chagrin of CNBC. NDX up 0.33, and the RUT about the same percent. Okay, so as far as today's candles are concerned, in the pre-hours we had a huge spike after a huge run-up yesterday. Right about the red arrow is where there was a breakout level from which they failed and then immediately turned around and rallied really quickly. Look at the volume with which they rallied on. Something went on. Nobody knows what the heck it is. I don't believe in coincidences. Right about the same time, I see an erroneous tick on the SPY, and I'll show you that later. That was like 112 and change. So, I mean, not 112, hello, 212 and change. So, there are no coincidences. Don't know what happened, don't care what happened. If you're short, you carried. So it was an incredible day after an incredible day before that. And in the pre-open, we had an incredible spike right here. This is the ES, which is the E-mini, so the S&P. And then the open fizzled a little bit. Let me zoom in on today's open. Fizzled a little bit, and then immediately rejected it, meandered most of the day, and then somewhere around here we decided, oh, we're going to run, and they started running. They got to the highs of the day, and then decided that they want to meander a little bit longer. And then right about here, strange, is where they rallied into the close on the back of a rallying bond market. That is unusual because usually it's the flip side. Bond market rises, markets drop, and the rates did not move in the expected direction. Also, all day, 10-year rates should move opposite to the bond market, and at times they move together. Strange. Let's call it quadruple witching. Boo. The close fizzled. They have rebalancing going on in the S&P and the Nasdaq, not in the small cap. That's the Nasdaq right here. That's the NQ. That is the small caps right here. So, a little bit of disappointment for the bulls right here, but how can you be disappointed after the candles I'm going to show you right now? Apple was a disappointment, closed close to the low of the day. That's Apple right here. Low of the day, closed right here. Ish close, down 0.77 when everything else is green. I mean, Google is up 1%. You got up, most everything. The sentiment's green. Oil rallied. I've stuck to my guns. I said oil needs to be closer to 60 than 50, and sure enough, it rallied, and now it's closer to 60 than 50. Up 6% today. Don't know why. Don't care. I don't trade it. It's a rigged market. All right, so that's today's scoreboard. Now let's look at the week, and let's flip to charts. This is the weekly candles for the small caps. So you can see chop, 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 chop. That's the correction. Each candle is 1 week. That's 1 year. The correction into mid-October, recent one, from which we sprang out. And then we meander, we don't know, doji, 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 meaning indecision, and then boom, big green week. Last week, not so much, big red week. This week, even more green. This is the candle dwarfs, eats 1, 2, 3, 4, 5, 6 candles before it. I'm no technical analyst, but that's got to mean something. Anyway, be careful chasing up here. I think the onus is on the bulls right now. All the catalysts are gone. The only catalyst I can see that can catapult us up is Draghi. If they actually come out with something before quarter one of 2015, then we could leap up even further. Now everybody's expecting the small caps. Let's go with IWM. This is what I'm showing. to close above 120. Not sure why they're looking at 120. I would want to look at recent highs and all-time highs. Why settle at 120? That's 121 and change. So 120 could be attainable. Today it fell short. This week's high is 119.48. So 120 is within a stone throw, and this is a fast mover. 120 won't appease me. I'd want to see the all-time highs. But technicians might take 120 and run with it. We'll see what Monday brings. All right, volume was high, so you can't say it wasn't a good move. That's the IWM. Let's turn to the SPY, which everybody looks at, and I told you it was a funky candle this week. It will be in this, and you'll see it as soon as my computer wakes up. Knock, knock. Boom. That didn't happen. 212.95, the high, 212.97. I doubt it. This is a erroneous show. We closed above the green 2-year long trend. We did pierce it, so it was scary for a little bit, but we did so on high volume. I don't know where the volume was before today's candle or like yesterday's candle, but we moved like 5% in 2 days. And let's see that in action. We are looking at the RUT or IWM. It doesn't really matter. Look at that. This is my box of resistance from which we failed multiple times. We did peak above it several times, a couple of times at least, and here we are peaking above it. Right here there were some shenanigans from which we dropped and recovered. I still don't believe this breakout. Cautiously bearish maybe one can be. Okay, Obi-Wan Kenobi. All right, let's go to the Qs, NASDAQ, weeklies. That's another look-see. All right, the Q is not so bullish looking. We did have incredible candles yesterday, this week. However, I can draw a line. In fact, I will. From here, lower highs, week after week after week. So the onus is on the bulls to break out of it. So is this are we going to get more candles? This is a green one, and then are we going to get more candles, or is this the turnaround where we're going to spike up? I don't know. We need a lot of big players to jump up. I think Apple has run out of steam, so we need other people to step up. All right, so this is the deal there. The candles are incredible. Look at this candle right here. That you don't see that often. Look from here to here. It pierces this bottom end, pierces the upper end. This is an incredible size candle. I don't think we've had one like this year. This one comes close, but not even. And then to follow it with a gap up and another giant candle and another candle. This is an incredible 3-day move, followed by incredible 3-4-day move downwards. This is an ugly candle. So this is the RUT small caps. You got to respect these moves. You can't just anyway. This is the erroneous candle here that didn't happen. However, giant candle reversing a couple of days of red, big gap up, and strange. But now we are at this green, which has been a lid. Big doji. Let me zoom in. So that's why I say the onus is on the bulls, even though, actually, because of everything is so uber bullish. Everybody's bullish. We've got money piling into the US because our dollar is strong, our markets are good. Everything is lined up for bullishness, and that's all we can muster. A doji after such a big day and a big rejection of the low. Good volume, but a doji, that's all we can muster at previous resistance. Anyway, so the onus is on the bulls, in my opinion. This is my opinion. So how do I trade this next week? I can still go cautiously long. It's an easy battle to fight with the bulls rather than against the bulls. But I cannot in good conscience go long without shorting something. So I can cautiously short by picking some credit call spreads out in time. Nothing at the money. Take the binoculars and use a sniper rifle from afar. Give yourself distance, meaning if I'm shorting the SPY, I don't short it here or here or here. I short it up here and out in time. And then I can take a few longs along the way that I like if I wanted to go along Google or Baba or whatever. So this is how I would trade it. Going into next week, the same picks from last week still stand. I said to go along the big oil companies like Exxon. Look how much money you would have made had you gone Exxon. For example, why did I do that? Because I thought even if oil is terribly destructive to all of these smaller companies, the big guys are going to survive, no doubt, and they're going to gobble up all the little guys at cheap fire sale. This still stands. However, after all this run, maybe you want to trim a few profits there. GoPro is my short for 2015 from when it was up here. Now I thought the mid 50s was the target. I was right, and I thought I could go long it somewhere around here via debit call spread tester. That doesn't pay out today, down like 5 or 6%. So this might be a target for it. So cautiously long if somebody wants to desperately go along it via credit put spread. I'm not a fan, but you can to finance some debit call spreads. It looks like it's coming down to this target in order to bounce and play this range right here. However, the management there seemed to be very destructive to stock price by doing all these sales and whatever and whatever. So that's a giant concern. So credit put spreads are scary. I'd rather play it via debit call spread if I want to. But overall, I'm short this name in theory. I don't like it. I don't like Tesla either, although it did bounce really hard. And it's looking like it wants to break out of this trend right there. Anyway, that's enough ideas. Play it safe. This is the end of the year, Santa Claus rallies and all of that. People love to trade that stuff. I don't. I'm starting to short out in time and higher than here, give myself 5 to 10% buffers, and take a few longs along the way whenever I need to. However, at these altitudes, I'm not compelled to do so. Nick Shaheen signing out.